the best of Money Matters.
Market View on Money FM 89.3.
Hi, I'm Willie Keng. You are listening to Money FM 89.3, and it's now time for Market View, where we take a look at how the Singapore stock market closed for the day, the biggest movers, sectors, and companies to watch. But first, a quick recap of how we started the day. Singapore stocks sold off as Asian markets tumbled this morning following US President Donald Trump's tariff announcement last Wednesday. The Straits Times Index plunged by 8.5%, falling below 3,500 points. This marked the largest intraday decline since the STI crashed 9% during the global financial crisis in 2008. Meanwhile, Singapore REITs recorded net institutional inflows in March, rising 1.4% this year. Now, how would the tariff shock unfold in the year ahead? What should investors do? And are Singapore REITs truly a defensive asset class in this uncertain environment? With that, let's unpack all of these developments with David Kuo, co-founder of The Smart Investor. David, welcome to the show.
Thank you, Willie. Yeah, what a day.
Yeah.
What a day.
I mean, we have had last week's two-day bloodbath in stocks post-tariffs. Investors are extremely nervous, David. I mean, could we see a repeat of a Black Monday, the 1987 style crash where $1.7 trillion of market value wiped off in a single day? Your thoughts here, David?
Well, I think it could get worse, Willie, and it really depends on what happens in America tonight. I was listening to some commentary from President Trump, who was talking about we need to take some medicine if we want to heal the patient. Now, that all makes sense. But what he's actually giving the world is not medicine, Willie. He's giving them poison. Right? and I think when you poison a patient, the patient is not going to recover. So it really depends on what happens over in America now, what happens over in the Trump administration, and what happens over in the Federal Reserve. What are they going to do? Are they going to step in and try and calm the market, or is it going to let the patient die? That really is the choices that they have right now.
I mean, speaking of patients here, David, I want to move on to patients here in Singapore. I just want to know, what is the impact, on tariffs? How has the STI fared so far, and the impact of tariffs on the Singapore market?
Well, what is interesting is that some of the worst hit companies have been shipbuilders. So we have things like Seatrium, Yangtze Shipping, maybe Keppel to a certain extent, although it's not really in shipping anymore. Singapore Industries to some extent. I mean, those were at the bottom of the list. And the ones that were least affected, it is very difficult to find anything that was in the green today. In fact, in the STI, there were no shares, no stocks that were in the green. But there were some real estate investment trusts. So, I mean, that is quite interesting. And I know you want to talk about that a little bit later on. And I think what investors really need to do at the moment is to go and have a look at their portfolios and say, which are the stocks that I like most of all? Because what we tend to find in indiscriminate selling, which is what we're getting at the moment, people just dump everything. And so that can present itself with a buying opportunity. But just bear in mind that these kind of bear markets that we're in, we normally have one about once every 6 or 7 years. The last one was in 2020. So this one has come a little bit earlier than I anticipated. But we've had bear markets in the past, and they recover. Eventually, they recover. But it depends on how long that recovery process is going to take. It could be a week, Willie. It could be a month. It could be a year. Or in the case of 1930, when the last time the American government slapped these tariffs on the world, I mean, it took several years for the stock market to recover. So it all depends on what, as I said, happens in America now.
If you're just tuning in, we're now speaking to David Kuo, who is the co-founder of The Smart Investor. David, I've been reading your blog here, and you and your team have written a very good article on Trump's global tariff shock. I just want to get your views here. And there were so many questions. I'm pretty sure there are a lot of questions on investors' minds. Should I sell? Should I hold? Should I wait? David, I just want to ask you here, what should investors do, in times of uncertainty like this, and why?
The thing that I try to tell our members and subscribers is this. The price of a share, which is what we're actually seeing at the moment, the price has fallen. You have to differentiate between what is causing that fall. And the best way of looking at it is to say, is it the earnings per share that has fallen, or is it the price to earnings ratio? If you multiply the earnings per share by the price to earnings ratio, you end up with the price per share. Right, that's a very simple formula. So you have to decide, have the earnings of these companies fallen? Are they likely to fall? And if so, how far can they fall? Or is it a case of the PE ratio being driven down? PE ratio is one of these really sort of crazy ways of valuing stocks.
Right.
But essentially what a PE ratio is, it puts together things like people's emotions, how confident they feel about a particular company, interest rates, all sorts of things feed into the PE ratio. So you have to decide. If you're investing in a company whose earnings per share is not likely to be affected by the tariffs, then I would say carry on investing in those companies, and if anything, buy more. The PE ratio we have no control over, Willie, because the PE ratio is one of those things. Over in America, the PE ratio was well above 20. Here in Singapore, it's down in the low teens. And so why is there a difference? Because people had more confidence in American companies than they do in Singapore. Wrong, but, that is the way they feel, which is why Singapore shares generally are less valued than American shares. But as they have seen with this bloodbath, everything gets sold off regardless. So go back and have a look at the companies that you like and see whether or not their earnings per share are going to be affected, really.
David, I know that you are a dividend lover, and this is something we're trying to follow up here from here. I mean, in these times of crisis, is dividends something which you will focus on, and is it more important than ever?
Definitely 100%, Willie, because when the market is expensive, I have to pay a lot more for the dividends. For every dollar of dividend that I expect the company to pay me. When the stock market has fallen, I pay less. So it's a bit like you going to a supermarket. You want to buy expensive things or do you want to buy cheap things? And you would say, well, if the chicken is cheap today, then I'll buy the chicken. I'm not going to buy the beef because it is a little on the expensive side. So that's the way I look. That's the way I look at the stock market. If things are cheap, then I will go in and I will buy, and I will be buying tonight because there are some stocks that I do definitely want to buy. And so one of the dividend-paying stocks around, Willie, are the real estate investment trusts, or the REITs. And this is where it becomes quite interesting because what is the Federal Reserve going to do with regards to the Fed fund rate, with regards to interest rates? Are they going to cut interest rates to try and stabilize the market, or are they going to keep interest rates where they are because they think that the tariffs that have been imposed by the U.S. administration is going to be hugely inflationary? I think at the moment it is still 50-50 which way they go. If they do go in the direction of cutting interest rates, then I would think that would be a boon for real estate investment trusts, because many of these REITs that you see out here in Singapore, CapitaLand Integrated Commercial Trust, Maple Tree, all the hospital REITs, they are still going to be in operation regardless of what goes on. But a cut in interest rates will be a boon for them because, number one, they can renegotiate, refinance their loans, and number two, it just simply means that they are going to be more attractive to investors than putting your money in savings accounts because interest rates are going to get cut, and if you need the income, where are you going to get it from, Willie? Certainly not from a deposit account.
Yeah, absolutely. I mean, following up from what you mentioned, David, I mean, looking at real estate investment trust, Singapore REITs, they have recorded net institutional inflows in March. They have rose about 1.4% this year, despite Trump's tariff announcement. I mean, you have just mentioned about Singapore REITs, in spite of interest rates. Do you think they're still a good investment with, the whole idea of tariffs here?
For sure. I think part of the reason why people have been moving into the real estate investment trust or REITs is because they think or they feel that interest rates are going to be cut. Certainly over here in Asia, unlike America, we don't have a dual mandate. The central banks over here in Asia only care about one thing, which is inflation. Over in America, they have to bother about not only inflation, but full employment. So that makes the Federal Reserve's job a lot more difficult than it does over here. If over here we believe that inflation is on the way down, then it gives the central bank the opportunity to ease monetary policy. In other words, cut interest rates. If interest rates are going to be cut, then you have to look around and say, where else can I put my money in order to get some kind of income? And real estate investment trusts are ready-made for that. Over in the STI, the Straits Times Index, we have so many REITs from which you can choose from. And then you go down into the mid-caps and the small caps, and there are plenty of REITs. And just go and have a look. Just walk around the shopping malls, for instance. If you're interested in things like the shopping mall REITs, the commercial REITs, and you can see that offices are full. You can see that the shopping centres are full. The shopping malls are full of people out there buying. So that will give tenants the confidence to say, yeah, I want to stay here because this is where the footfalls are. Just go and have a look at Serangoon Next one day, Willie. Go and have a look at the one that is owned by Fraser Centrepoint Trust. You try and get in there on the weekends. You can't even get a table at the restaurant. So that tells me that there is confidence amongst the consumers, certainly here in Singapore, to go and venture into the shopping mall. And as I said, the offices are full, so I don't think we really have a great deal to worry about as far as REITs are concerned, apart from the fact that we are going to be earning, hopefully, high distributions.
Yeah, I mean, David, you're making me drooling to shop for some of these Singapore REITs at the moment. One more question.
But of course, I mean, we also have to caveat that with the fact that yes, these Trump tariffs are going to impact everybody around the world. So
yeah, for sure.
We need to be prepared, and we need to understand that there is just nowhere to hide at the moment, particularly when you see that Donald Trump has slapped tariffs on 2 islands in the Antarctic, the Heard and McDonald Islands, that have no inhabitants whatsoever apart from penguins. So why there are tariffs on an island that is inhabited by penguins, I have no idea. I don't know which clever guy over in America thought it was a good idea, but it just goes to show how bizarre these tariffs are.
Yeah, I mean, following from that, one more question before we let you go, David.
Yeah, okay.
What's on your radar for the week ahead?
Well, we've got the bank earnings season coming up, Willie, and I think everybody will be glued to the TV sets if they have a financial channel to watch to see what the banks will have to say. And again, it really goes back to what the Federal Reserve is likely to do. If the Federal Reserve keeps interest rates where they are, then I think the bank's net interest income, in other words, the amount of money they get from lending money to people versus what they pay people, I think that will remain strong. But below that, Willie, people will be looking to see what the banks have to say about credit quality. They have lent a lot of money to a lot of households and to also a lot of businesses. And if they mention anything about credit quality and having to make bigger provisions for credit losses, in other words, bad debt, then I think the banks are not going to feel, people aren't going to feel very confident about banks. So this is one of the unintended consequences of these tariffs, that it could hit households in America, which means that the struggling Americans are already having difficulties going out buying things. And if the import tariffs raises the cost of goods, it's going to make it even more difficult for them, and something has to give. And if it's because they're not borrowing less money or they can't repay the loans that they have, then that's not good news for the banks, Willie.
We have been speaking with David Kuo, co-founder of The Smart Investor. Thank you so much for your insights, David.
You're welcome, Willie. Have a good day.
Stay with Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.
To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.